What's up, everybody? We're about ready to get started. Hope everyone is doing well. Got some more people shuffling into the room. Type a 1 in the chat pane if you can hear me okay. Type a 1 in the chat pane. Let's make sure we got the chats. Tini's can chat with everyone. There we go. 1 in the chat pane if you guys can hear me. Hopefully I'm coming through okay. Anyone else? Can you guys hear me okay? Tracy, you put a 1. The rest of you guys, can you hear okay? Awesome. All right, so we're going to go ahead and get started. So in this class, we're going to talk about a trading strategy called the Snapback. And in case any of you guys are trying to Google what is this about, this is actually an in-house strategy. So there's probably not a lot on Google that explains what this is, because this is kind of our in-house strategy that we've been using for the last, 3-4 years, something like that. So we're going to go ahead and get started and jump in, and I'm going to talk a little bit about using this with funded accounts. Okay, but first, this presentation is for educational purposes only and does not constitute financial advice. Trading involves significant risk and is not suitable for all investors. The decisions you make and the actions you take in trading are solely your responsibility. Past performance is not indicative of future results. Understand and acknowledge these risks before participating. All right, so today I'm going to show you how a structured, rule-based trading system removes decision-making and why that changes everything. Okay, so how many of you guys, go ahead and put it in the chat pane, put a 1 in the chat pane if you are considered, or you think of yourself as like a discretionary trader. You're very emotional, very how it feels in the moment. Type a 1 in the chat pane if you are a discretionary trader, or a D, I should say, D if you're discretionary. Now, myself and a lot of people that work with us are more rule-based structured. So people who have more of an engineering mind, why is it doing, why do we enter a trade? More system, rule-based process systems, process-based strategies tend to gravitate to our platform and tend to gravitate to like our style of trading. Okay. So used to have a friend, he was always emotional, everything's all over the board. And it was very hard to learn in that kind of environment, because I'm like, why did we enter? And I would get a smart aleck answer from a mentor who's like, 20 years experience. Now, if you're learning to trade, if you're a newer trader, or you're a struggling trader, that's not a super helpful answer to tell you some smart answer based on experience, right? So let's talk about the snapback. Let's talk about what it is, how it works, and I want you to think of the snapback. If you guys have ever heard of the opening range breakout, the snapback is literally the opposite of the opening range breakout. Okay, how many of you guys have ever heard of the opening range breakout? It's one of the most popular trading strategies. We actually taught that literally 2 weeks ago, same time, same place. And this is more for a reversal. Now, you guys have probably noticed in the markets, things are kind of going up a little, down a little, up a little, down a little. And those are what we refer to as kind of range bound or kind of sideways markets, right? Range bound or sideways. So breakouts don't really work great if things are just going sideways, right? You end up getting into a trade and then you're getting stopped out, and then you enter again, you get stopped out again. And so this is a strategy that my team and I came up with in-house, I want to say 4+ years ago. We've been implementing this and trading this almost every day. And it's called the Snapback. And what it is, it's really more of a reversal. Think of this as the anti-opening range breakout. Okay, the way this works is we define the first 5 or 15 or 30 minutes of a market. So if you're trading futures, if you're trading stock, you're trading Forex, whatever you're trading, that first 5 to 30 minutes, and I don't want you guys to fixate too much on, is it 5 or is it 15 or 30? We'll talk more about that in a minute. But just imagine the first X number of minutes, right? You guys can follow the first few minutes, 30 minutes, whatever, of an opening market of the opening range, okay? And what we're gonna do is we're gonna draw, if you can imagine the opening range, looks something like this, like your very first candle of the day, right? This is like NVIDIA, or if this is the ES, the S&P 500 futures contract, or like whatever asset you're trading, gold, which is gold, oil, been kind of going crazy lately, right? The very first opening range is basically your high and your low. And you can draw a range of like what that looks like, your high and your low, right? The high of the candle and the low of the candle, okay? And what we're going to do is we're going to look for a reversal. And so the way that this works is, let's pretend that the second candle, and I got some more examples here in a second, but let's pretend the second candle goes above, and that second candle, what are we looking for? We're looking for a reversal, right? So if things go higher, we want to reverse and go lower. This is literally the opposite of the opening range breakout. And so in this case, what we want is we want a higher move and then a lower kind of reversal. Again, reversal. Now keep in mind, this doesn't work in every single market condition. This works really, really well in range-bound or sideways type markets, okay? Doesn't work in trending markets. In trending markets, you're going to lose, right? As things are just screaming higher or screaming lower one way or the other. If it's breaking out or breaking down, breaking out to the upside or breaking out lower to the downside, either way, that's not this environment. That's not where this environment kind of works well, okay? So let's talk about why it works. We'll talk about some specific examples. So the peak volume occurs in that first 30 minutes. If you guys have ever seen something like bad news of a stock, something comes out on the weekend and people are putting all their sell orders in on a Saturday or a Sunday, and they're going to sit there until the market opens the next morning, right? 8:30 Central, 9:30 Eastern, the market opens, all those orders are getting filled. That's why that first 30 minutes of, hey, I want to buy Tesla, or I want to sell Tesla, I want to buy NVIDIA, sell NVIDIA, I want to buy all the NASDAQ, the futures contract, like, right? All of those market orders are just sitting there waiting to get filled, waiting for the market to open. And so again, this strategy works really, really well in trending or sideways, or we refer to it as range-bound markets, okay? You guys ready to kind of look at some more specific rules? Let's jump in. So again, use the first X number. Don't get hung up on, is it 5 or 15 or 30? We'll talk about that in a minute. It's X, the first X number of minutes for the opening range, okay? And what you do is you basically enter an opposite direction. So if things are breaking out to the upside, you're going to short it. If it's breaking lower, you're going to buy it, right? Again, range-bound kind of sideways markets. And we're going to put our stop order, our stop loss, which is basically a stop loss order is our emergency brakes so that we don't destroy our account on one losing trade. We take a small loss, and always think of like a stop loss or risk as it should feel like a little paper cut, right? It shouldn't cut you to the bone, right? You're taking too much risk if your whole like being is set up and all of your energy is tied around whether you win or lose on a single trade. You're trading way too big, right? It's like if you're just learning to play baseball, you're not trying to hit a home run when you're just trying to learn how to bat, period, right? A lot of people jump afar and they jump ahead. And how quick can I make tons of money? But you got to understand the process, okay? So again, stop loss helps maintain, helps kick us out of a trade for a small loss. And I refer to those as just, it should be like a small paper cut. Yeah, it stings a little bit, but it's not the end of the world. It is what it is, right? And then the thing we highly, highly recommend, and this is unique to us and unique to our company, is use fixed risk. What does that mean? That means we're not always trading the same size, whether it's futures contracts or whether it's a number of shares on a stock. We're using a fixed risk. What does that mean? It means fixed risk means we're going to define how much we're willing to lose on a trade if we're wrong. So for example, if I'm using a funded account and I have a $50,000 account and I pay $22 a month for it, or $22 or $30 for it, that I'm risking. So if I'm wrong, I'm going to lose between $100 or $250, right? Now, ideally, you pick a number. If you're just starting out, $100 is pretty decent, right? You're going to lose $100. If you're wrong, it'll kick you out of the trade and you try again. It's like, thank you for playing. Let's try again, right? And so the way that this works is this is a one trade per day per ticker. So, and if you're using funded accounts with something like NinjaTrader, then you're probably going to be using a funded account program like Apex, like Topstep, like Lucid. How many of you guys have or use those? Go ahead and put in the chat pane what funded account program you're familiar with if you've used any of these funded account programs. There's dozens and dozens of them out there that work with NinjaTrader. Others work with MetaTrader only, right? Go ahead and put in the chat pane, what are some funded account names that companies you've worked with, or names that you are familiar with? Go ahead and put that in the chat pane. Okay. So what we're going to do is we're going to look at a very, very specific example, and so MetaTrader, Franklin, is the platform. Yeah. The funded account program would be something like my, I'm trying to think of some for MetaTrader. I'm drawing a blank. Yeah, I'm drawing a blank. Apex is a good example. Topstep, exactly, good examples. Okay. So here's how this strategy works. We're going to get into the mechanics, and you guys should be impressed that I have some animations here. Okay. And we're going to go through it slow. We're going to walk through the mechanics. And again, the strategy itself has an edge to it. Okay. It has an edge, and we use technology to kind of protect the edge. We'll talk more about that here in a minute. Okay. So here's my very first candle of the day. Again, this is similar to the opening range breakout, but everything's in reverse. Okay. So our range is drawn. What does that mean? The range just refers to the high and the low, the difference between the high and the low. Okay. And let's just pretend that the high and the low represents, depending on what we're trading, let's say $3, right? So the difference from here and here is $3. Maybe this is like $100, and maybe on a stock chart, this is like $97. Okay. So the difference is $3. So this is our range. Now, the next step is to close below. Okay. Now, the difference between closing below and just breaking below is what? Well, the candle has to finish moving, right? You'll see that the candle actually right here, there we go. It literally closes right here, right? We close below the low. So what we're going to be looking to do is buy it and wait for a reversal and go higher. But we're not going to just buy right here. Okay, we have some rules and some mechanics I want to explain to you guys first. Okay, now let's assume that we close right here at my white X. We close right there, but we only want to get in if it goes lower. We don't want to be in the trade if and only if we cross that teal neon color line. If and only if we reverse, then we want to get into the into the trade. And ladies and gentlemen, are you guys familiar with what type of specific awesome order is required? What order type is required to get in when things reverse, and only when they reverse? So for example, if it falls off a cliff, we're not in the trade, right? What kind of, so it'd be a buy stop or buy stop limit. That's correct. And so the idea here is we're going to close right here, but we're going to put our our buy stop limit. It's probably what we would use, or not probably, it is what we use. We buy stop limit right here, which means if price action turns around and goes higher, and you guys can see we're probably, 50 cents to $1 away. If it goes lower, no big deal. We're not in the trade, and we also don't lose. But if it reverses, then we're in the trade, and we're waiting for a reversal. Again, the idea here is a reversal, and this is range bound, right? Range bound markets basically just look like this, right? Obviously not to scale, but basically, right? So we're going to get in here, wait for it to go up here, exit, right? Or if price action goes higher, we're going to get in and go lower. That's range bound, okay? Now, the difference between this type of a strategy and orb are looking, opening range breakouts, looking for a move in a certain direction. This is looking literally for a reversal and a U-turn, essentially, okay? So again, if you're familiar with the opening range breakout, we taught it 2 weeks ago. This is the opposite of the opening range breakout, okay? And this was basically formulated, and we kind of created this in our lab so that all the frustrations we've ever had with the opening range breakout, this solved all the needs, right? And then all you have to do is, okay, what type of market are we in? Let's apply the appropriate strategy, right? And it's obviously not 100% guaranteed win rate, but let's look at the mechanics, okay? At this point, we're going to put in a trade, and this is going to be our entry against a buy stop limit, right? If and only if the price action moves higher, then we're going to get in. Then we're going to go ahead and place our stop. Our stop is our emergency brakes. And then we're now triggered into the trade, right? So again, let's pretend that this is a 5-minute chart, which means each one of these candles represents a 5-minute moment in time, right? 5-minute moment in time. So this represents 5 minutes, 10 minutes, and this is now our third candle, which is 15 minutes into the market open, right? At this point, ladies and gentlemen, when the trade closes, price action closes right here, correct? And are we profitable or not? Yes or no? Are we profitable in the trade? Some of you guys throw out the answer, yes or no, are we profitable in the trade? Now, obviously, if price action falls off and crosses the red line, then we would be losing, right? So in this, because we bought to open, we want price action to go higher. Now, if you're ever looking at a chart or any of our systems or strategies and you forget like which way we want things to go once we're in the trade, easy thing is you want to go away from the red light and towards the green light, right? The green line, not light, the green line, right? We want to go towards the green line, and that's what we refer to as our take profit or profit taker. SL is stop loss, okay? So again, the idea here is we want to wait for the close to occur. The first candle comes in, second candle closes below. We throw out our stop loss and our take profit, and then now we're profitable. And at this point, let's say that we risk, just hypothetically, we risk $100, okay? At this point, how much profit, can you guys tell by the chart, how much profit would we be in if we entered here and price action currently closes right here? And each one of these represents $100. We'd be up maybe $120, right? $120, so we'd be up $120, okay? Now, that's pretty good, right? Again, let's pretend that this is a 5-minute chart. We'll call it the 5-minute chart, and we're risking $100. Okay, so at this point, we're up a little bit we would refer to that as a R. An R is our risk unit. $100 of risk is what we're risking. If it goes down lower, boom, we're out for minus $100. Okay, here we go. You guys ready to see what happens next? Boom. To our target. What does that mean? It means we risked $100, $100 of risk, and we want a 2x or a 2R reward, which means $200 win. Okay. Now, obviously, sometimes you don't always get 2R. Sometimes you have to trail a stop, but I just want to show you guys the basic mechanics. Does that make sense? Hit me with any questions if you guys, if this is not clear. Okay. We're going to walk through this one more time just to give you an example. Again, the idea is they're waiting for something like this to occur. Again, snapback, when you hear the word snapback, if you can imagine that this is a football team and the quarterback throws the ball to, the person snaps it to the quarterback. The quarterback's here and he takes a few steps backwards, but the ultimate direction is downfield, right? That's the idea. That's kind of where the name came from. Okay. So a lower move, which tells us automatically because we closed below, we're going to be bullish automatically. That's what the strategy calls for. And because we're bullish, we're going to enter here with a stop limit order. And our stop, typically we use the stop market order for our stop loss. Then price, we're triggered into the trade. So we're definitely in the trade. We're up at this point about $50, right? If we have $100 risk, we're up $50, okay? Now what happens, how much would we be up if we risk $250? How much would we be up? Well, we'd be up about $125, right? And then this would be a $250. If we're risking $250, we'd be up about $250, and our 2R would be 500, which means we're risking 250 to make 500, right? Now, before some of you go, oh, let's just risk more because we'll make more, that is a double-sided sword, right? You also lose if it moves against you, you lose a bigger chunk. Okay, here we go. Take profit, higher move, triggered 2R. Does that make sense? Questions? Let me know in the chat pane. Okay, you guys want to look at another example, kind of the other way around. Let's look at a short example. Now, some of you guys may or may not realize this, but you can make money in a down market, or when stocks move lower, when gold moves lower. You guys seen oil all over the place lately with whatever's happening in the Middle East, right? So in this case, this is a short example. So what's gonna happen is we're gonna look for a higher move and then a rollover. Again, when you see the word snapback, I want you to think of this exact diagram, right? It's gonna reverse and go higher, or go higher and roll over and go revert lower. Okay, here we go. Range is drawn, which means our high and our low are defined for the very first candle. You guys, that's pretty simple. And again, let's pretend that this is a 5-minute chart, and we're going to risk. Let's do $100, so we can be consistent. Okay, so here we are. We're getting in right here, right? We're going to get in there if price action goes higher. But look, it actually went lower. Did it close above? Yes or no? The answer is no, it did not. It broke above, but did not close above. So again, we want a close above. We want the candle to, the white candle closes at the top end of the range, the body, and the black or sometimes red candle will close here at the low end of the body right here. Okay. So in this case, we did not get a trigger, right? We're 10 minutes into the market open, again, with a 5-minute chart, $100 risk. We are not yet. Oh, look at that. Our next candle, ladies and gentlemen, did we close above? Yes or no? The answer, Justice, Tam, Franklin, Yimby, did we close above? And the answer is yes, we did. Boom, there's our little X that shows where we close. Okay, now keep in mind, we're not in the trade yet. We got a full green light for the trade, but we're not in the trade yet. Okay? At this point, our entry is going to be right here at the green teal colored line, right? That's where we're going to get in, and we're going to use that magic stop limit order, right? We're going to get in using a stop limit order. So price action pushes higher. Are we in the trade at this point? No, we're not. Why? Because it has to cross the green line. So price action is up here. We want to wait for it to get lower. We only want to get in if it goes lower, right? Now, some of you say, well, Matt, now's a great time to short it. No, not really, because if it takes off and goes higher, we don't want to be in that trade, right? So again, ladies and gentlemen, following the rules and the mechanics, I think of it like a trading strategy, like a recipe. You guys ever tried to make barbecue chicken or cook a cake, bake a cake, and you like skip a step? Like it doesn't turn out at all as expected. You're like, yeah, but I'm putting my own flavor on it. Yeah, then it doesn't turn out at all like you expected, right? So here we go. Next candle comes in. And this point, ladies and gentlemen, we got into the trade, right? And so at this point, our stop limit and take profit are set up. Okay. So at this point, we're in the trade. And at the moment the fifth candle comes in, call it candle number 5. When candle number 5 comes in, ladies and gentlemen, are we profitable or are we losing? Can anyone tell? I'll pause to see. Are we profitable? Are we winning or are we losing? Put a W or L, winning or L, losing. Okay, again, we're risking $100 in this example. Does anyone know if we're winning or losing? It's not a trick question. Justice says we're losing. A couple people say winning. Mixed bag of answers. In this case, we got in here. We want to go lower, and we actually closed. And the answer is we are losing, but just a little bit, maybe $10. No big deal, right? It's not the end of the world. It's not time to freak out yet. It's just barely down, okay? Boom, our next candle comes in. Again, we're looking for a turnaround reversal. That's what we're looking for. At this point, ladies and gentlemen, price action closes right here, and we're up roughly about $50, right? $50, and we're feeling pretty good. We're like, dang, I'm rocking this trading thing. I got this down pat, right? Everything's going according to plan. Now, of course, these are animations, examples. We all know what's going to happen because we're sharing the strategy. It doesn't always go according to plan. Boom, there we go. Look at that. We went from $100 of risk to now our 2R target. And 2R is basically 2 times 100, which means we made $200. Now, the idea here with using fixed risk is that you're risking a specific amount if the trade does not go in your favor. Okay. The reason that's important, especially when using Topstep, Apex, Lucid, the reason is why. Well, you have fixed risk and you have some very sometimes rigid rules you have to follow, right? What are those rules? Well, there's so much you can lose in a day, so much you can lose overall, or you blow up your account and you have to start all over, right? So it's almost like trying to go really fast. You might get lucky or you might blow up, right? And so the idea, you're using fixed risk so that you can apply the same amount of weight to every single trade. If you're going to start out trading with $100 of risk on a $50,000 account, which, by the way, $50,000 accounts are my ultimate favorite. I think they're pretty easy to get funded. I've got them funded in a day, and we have technology that can help get them funded, help with all that. Again, they're only tools. There's no guaranteed outcomes in life except, of course, death and taxes. That's the only guarantees of life. Okay. So here's what you guys are probably thinking. Well, Matt, you gave me 2 examples. How do I know when to apply each one? Well, let's talk about that. Okay. Again, there's our magic stop limit orders. The average retail trader does not know about stop limit orders. So for those of you who know about them, you're in the elite. Okay. You may not be a profitable trader, but your knowledge is far superior to just a retail trader who just buys wherever the price action is. Like market in, right? Market buy. So again, here's how this works. If we close below, and again, this is a reversal. If we close below, we're looking for a reversal move higher, right? So what does that mean? Well, in this case, if we close above and price action is right here, we're going to get short, and we close below, we're going to get long. Okay. So what does that mean? That means essentially the second candle, or the candle that closes above or below our high after that first candle. That first candle is like our little template, right? It's like a little cookie cutter. We're just pushing it in and trying to figure out, well, that's the template. If we close above or close below, that is our trigger. That is our signal to get long or to get short. Does it make sense? Okay, so let's look at this example one more time for the short. I know I kind of flew through this, but let's look at this one more time just so it's clear. Okay, again, what we're going to try to do is go for a reversal. When you see snapback, you think reversal. When you hear opening range breakout, that's more of a trending or continuation, right? Again, this is kind of the opposite. So let's go through this one more time just to get it in the recording, and you guys can get clear on how this works. Hopefully, like tomorrow when the market's open, you guys can jump in and start executing this. Or if you like after hours, futures market's open now. Okay, let's dive in, or the after hours. Okay, so range is drawn, which means our high and our low. Okay, high and our low. That's our very first example, our very first template, Franklin, I'll come back to that example in a second, or your question. So here in this case, we do not go immediately higher. We went higher, but we closed lower, right? Did we close outside of our lines? The answer is no, we closed right in the middle. So again, second candle comes in, nothing for us to do. We're just here hanging out, okay? The next candle comes in. Ladies and gentlemen, we have now closed above, and we got the all clear to go ahead and set up our order. Okay. We can set up our order. We're going to enter here, stop loss up here, and our take profit down here. Okay. Again, let's pretend that this is a 5-minute chart, and we're going to risk $100. Okay. $100. Boom. There's our fourth candle comes in. Guess what? Are we in the trade yet? Yes or no? The answer is no, we're not. We're not in the trade yet. We're watching it, and it's moving against us, but we're not in it, right? It's like if it just rockets higher, fine. We're just watching. We're not in yet. Why? Because we closed above, we put in an order, and until it crosses and goes through this green doorway, this teal colored line. It crosses that line. Until it crosses that line, we are not in the trade. That's the beauty of the stop limit order. In this case, it would be stop limit sell, right? Okay. So of course that black candle comes in. We're now triggered. We're in the trade, and we're down $10. Woo! $10. That's it. Okay, candle number 4, candle number 5. So now we're going to throw out our stop loss and our take profit. There we go. Move lower, and boom, the bottom blows out. Now, some of you guys talked about, if this was a resistance level, we actually blew through that, like with the shotgun. Yeah, absolutely. That's part of the beauty of the reversal setup, the snapback strategy. Okay, does the high and lows making be on the wicks or bodies? I'm not sure what you're asking. When or at what stage or factor in strategy to mark out the highs and lows? Yeah, so the high and low essentially is defined by the very first candle, right? So I guess I could have animated that exactly on here, but oops. The high and the low are pretty much the template for the very first candle that comes in. And we'll talk more a little about in a minute, but 5, 10, or 15-minute chart. Yeah. Now, some people trade futures and I swear by the 8-minute or the 17-minute. I don't want you guys to get too hung up on what time frame, because the strategy, you can use this on different time frames, okay? You can use it on a 30-minute chart. It's going to be kind of slow on a 30-minute chart, but ultimately I want you to think about somewhere between 5 and 30-minute charts, okay? Somewhere in there, and you guys can kind of study certain tickers like M and Q, or MES, or ES, or NQ, or GC gold, or MGC, micro gold. They all have a little bit different personality to them, okay? So we can talk more about that in a sec, okay? So Franklin, I'm not sure if I understand your question, but as far as when to mark the highs and lows is that very first candle, that number 1 candle on the day. And we have to wait for the candle to close. Now, closing is very, very important. The candle has to, not the market closing, but the candle has to close, okay? So what that means is on a 5-minute chart, you're 5 minutes and 1 second into the market, which means your next candle is starting to form. Okay, which means this candle has now closed. The reason that's super important is because you can't really define your range if, let's say, the very first candle comes in like this and you start trading it and then it makes a bigger move. Well, now your range is up here, right? So that's why it's important to let the thing close. Don't try to jump the gun. Don't try to, shortcut. Follow the strategy. Pretend like this is a recipe. It's a time-tested recipe, and any alterations could have a wildly different result, okay? So hopefully, Franklin, hopefully that answers your question, okay? Okay, here we go. Boom. Triggered. The close gives us the trigger to, okay, it's green light to get into the trade, right? We're not in the trade yet. Again, still not in the trade. We got to cross that turquoise line. Boom. We touched it. We kissed it. Now we're in the trade. We got triggered into it. Our stop is placed. Our take profit is placed. Boom. Now we're in. We're up about half an hour or $50, and then roll over. Boom. Quick. Easy money. Okay. And again, this is the strategy. Again, it's reversal. If you can imagine someone snapping the ball to the quarterback, he takes a few steps back and then ultimately goes the other direction. That's literally where the snap or the snapback, if you guys are familiar with football, American football, by the way, not European football, which is what we refer to as soccer. Okay. Is this making sense? Yep. My pleasure. Okay. Again, the idea here is the next candle after the first one that closes, and sometimes it's the third candle. In our last example, it was the third candle. Sometimes it's the second candle. Whichever one closes above, the higher the low. Okay. We're going to look for a reversal. Okay. So let's talk about what we do, how we kind of execute on this exact strategy. We actually have 8 strategies, ladies and gentlemen, that we teach. 2 of them we taught one 2 weeks ago. We got another one coming up in 2 more weeks, and we'll send the link here in the chat pane if you guys want to look at our upcoming free webinars that teach the different strategies. There's nothing magical here. We don't have any proprietary strategies. As you all know, every strategy is based on someone else's previous work, right? So even the snapback is a variation of something else, right? So again, we're open to share the strategies. The strategies are, in this case, you guys would execute these manually. If you're using Tradeovate, if you're using Rhythmic, if you're using TradingView, if you're using MetaTrader, if you're using NinjaTrader, anything manual, that's kind of what we've been talking about, how to execute the strategy manually, okay? Now, we do teach these strategies, and the idea here is that we're able to show you these structured, rule-based trading systems. And the reason that these are so powerful is that it removes the emotional piece. How many of you guys, if you're honest, you're a little too emotional when it's trading, especially if you have a PA account or an account that's already funded? How many of you guys are willing to be honest? Go ahead and just type yes in the chat pane or why. How many of you guys consider yourself to be emotional, right? You're overly emotional, like you're tied to the outcome, you're invested, right? And the idea here is that the rules and how we teach, how we structure the training, how we structure the strategies it removes most 99% of the emotions that come in, right? Because the emotions, like being human is like part of life, right? And where we get in trouble is when we outsource our decision making, right? We make decisions based on fear or greed, and we let our emotions make our decisions for us. Now, obviously, as a human, you have emotions. You can't ignore those. But when we let the emotions make our decisions for us, some of you guys know what I'm talking about. That's where we get into trouble, right? Emotion-based decisions. I don't know if you guys have ever made a huge financial decision that was super emotional and you regretted it just minutes or days or weeks later. That's what I'm talking about. We're getting away from that. We're sidestepping that because that's where a lot of traders fall into this pitfall of making emotional decisions, shooting from the hip, gut-based decisions. Yep. So some of you guys are saying you're emotional, you have panic attacks. Yeah, absolutely. Those are all human emotions. There's different layers there. But what we use is we actually have automated tools. So if you can imagine this strategy like the snapback, we actually have variations of it. We have two strategies. One's called the snapback and one is called the mega snapback, which is basically our own variation of the original strategy. Think of it like the 2.0 version of the strategy. Yeah, we can, Justice, we absolutely can get you a link to previous calls. Yeah, strategies, webinars. Yep. Give me a few minutes. I'll get the link for you. So ultimately, the way that this works is we have a strategy and a framework. If you prefer like following rules versus just shooting from the hip, buy here, sell here, get in here, take your profits here. Like it's way too random, right? It's like there's zero consistency, zero edge. It's just eeny, meeny, miny, mo, right? And you guys who've been trading long enough or struggled to get accounts funded, then you know exactly what I'm talking about, right? And so what we do is we have automation that executes the exact rules that we've shared with you. We have some automation and some technology that we offer, okay? So let's look at a couple examples of like where people get stuck with trading, okay? Now, how many of you guys would agree the strategy is not really all that hard? It's got a few moving parts, got a little bit of mechanics. You have to practice a few times. But just like riding a bike, learning to drive, learning to fly, like any skill is going to have some components, some things you have to understand, some basic things, right? This is where most people, especially with funded accounts, they get stuck with a couple of these. See if any of these resonate. Overtrading, changing risk after a big loss. So imagine losing on $100. Like I'm going to now change my risk to $500 so I can make back what I lost. Again, if you lose again, now you're at a $600 loss and you lose again, now you're at 11, right? You guys see how that can compound, right? And so the idea here is that we have a structured system that executes the rules. There's no guaranteed outcomes. You're not getting a predetermined outcome. This is not like a zip line straight to success, but this is a tool that helps you stay on the path, if that makes sense, okay? So most of you guys, if if you're familiar with Apex or Lucid or Topstep, some of the fund account programs you guys have talked about, violating daily loss limits or trading prematurely before it triggers, or trying to trade multiple times on multiple time frames. This is where most people get messed up. Now, you've probably, if you've watched any of our content, we're really big on being consistent over time. It doesn't matter if you lost today, made money today, this week, this month, this year. What really matters is that where you're going is always more important than where you are, right? So if you're stuck and you're making the same mistakes, spinning your wheels, being frustrated, if any of you guys are ready for a change and you're like, I've done it wrong for long enough, I'm ready for an alternative to all that, that's kind of where we come in, okay? Now, this is my own personal thing I've said, is that funded accounts allow beginner traders to make cheap mistakes, okay? Why do I say that? Well, let's talk about Apex for a minute, okay? As you guys know, most of you are probably aware, Apex changed their rules. Like within the last week, they have like a new thing that they're offering. And so a $50,000 account is no longer a monthly fee. It's now a one-time fee. You have to grow the account $3,000. And Tracy, can you remind me in chat what the 50K account is with Apex? Not the regular price, but the sale price. And we'll come back to that. But you have to grow the account $3,000 without losing $2,000. Okay. Grow it $3,000 without losing $2,000. So it's about a 1.5 to 2 ratio. 1 to 1.5, right? So 1 to 1.5 ratio, meaning you're allowed to lose $1 for every $1.50 you have to make, right? And then your daily loss limit is how much you're allowed to lose in a day is $1,000. Okay. Now, if you risk somewhere between 100 and 250, obviously it really depends on, there's some variables, but if you risk 100 to 250 and you're allowed to lose 2,000, you basically have 20 attempts at bat, right? 20 out of $100 risk gives you a $2,000 like flex, breathing room, right? You guys follow? So it's kind of like you can have 20 losing trades, basically, right? Now, if you're using like $250 of risk, and you have 2,000, then how many at-bats can you have? You have 8. You're allowed 8 losing trades in a row. Now, before you guys jump in and say, let's go fast and go hard, keep in mind, if you blow up, you have to start back at the beginning. And if some of you guys have figured that out already, start all over. It's consistency over time. It's not, hey, I made huge money. Because once you get into PA accounts, once you get into a funded account, you get out of the evaluation or the audition account. Once you get into PA accounts, you need to make sure you can actually get an actual payout and you don't break any of those rules, right? So again, it's super important. So my team is saying the current sale price is about, let's just say $30. So you can get it for $30 with Apex. Doesn't have anything to do with us, but our software works there. For $30, you can get a 50K account, okay? Practice account, audition account. Once you grow 50,000 up to 53, so positive 3,000 without losing 2,000, the money essentially becomes real, becomes a PA account, and then you can request payouts as you grow the second account. Okay. Now, the reason we talked about R and risk units is because funded account programs are very, very unique because of this rule right here, the daily loss limit, or even the trailing drawdown. Those are unique, right? If you're trading your own $50,000 account, you don't really have any like rules that says you can only lose so much. Like the broker doesn't know your own internal rules, right? So if, let's say you have a $50,000 account at Schwab or NinjaTrader or wherever your broker is, Interactive Brokers, losing $2,000 of real money costs you $2,000 of real money, right? Now, compare that to like a $30 evaluation account. Now, this, ladies and gentlemen, the difference between $2,000 and $30 is literally the reason why I say you can make cheap mistakes in a funded account. And the goal isn't to try to live on funded accounts, by the way. Some of you guys don't realize that's not the goal. The goal is to make enough money in those funded accounts for you to pull money out to set up a real brokerage account, whether it's NinjaTrader or Schwab or pick your preferred broker, so that you're never ever, once you pull money out and it's house money and then you start trading it, it's a totally different feeling, right? When you're using house money, when you're using profits to grow the account, you can be aggressive or conservative, whichever. And it's different than if you just put $50,000 in an account and lose 2,000 immediately, right? It's a totally different feeling when you only spend 30 bucks on the account, right? You blow it up, pay 30 bucks, get another account. Do you guys understand why I'm saying funded accounts, when you're learning or you're struggling, is the place to start? It is where to go to kind of make these cheap mistakes, okay? So let's talk about you. Some of you guys said you have the emotional challenge. This is where most people get stuck with the emotions, is they hesitate at entry. You kind of join the trade too late, or you double your size after losing. Anybody guilty of that? And then you cancel your stop loss order if this trade starts to lose, which basically means let's pretend that there's no stop loss and let's just turn off the brakes and let's just see what happens, right? It's like you're going really fast and you decide not to use your brakes. Well, at some point you're going to want to slow down. You're going to keep your account intact and not blow it up, okay? Now, keep in mind, this is what most people do, the manual emotional. This is what we recommend. This is what we do, is our technology actually executes the rules exactly. And we use the same size every time, same size risk every trade, whether it's $100 or $250 or somewhere in the middle. If you have a much bigger account, obviously we can talk about bigger risk. But in this example, we're focused solely on the $50,000 account, which is my favorite, my favorite size, because they're pretty easy to get funded, especially with some of the new rules that Apex has come out with. Your stops are automatically calculated and they automatically execute. There's no, I forgot to put a stop in. It's automatically happen. And then, as you guys know, sometimes we bring emotion and baggage to today's trading day because of what happened yesterday. Or if we had a fight with our significant other. Hello, right? We don't bring any of that. Again, this is just systematic, okay? So what I want to kind of leave with you all is that most traders don't struggle because they lack knowledge. You guys know that? Everyone's shopping for I need a new strategy, a new strategy, a new strategy. We can show you 100 strategies. But if you can't follow structure, can't follow rules, the rest doesn't really matter, right? Why? Because the type of trader we're talking about, of course, not anyone here, you guys, I'm not talking about anyone here, of course, but what happens? Well, they react, they second guess, again, that emotional. And then sometimes, guess what? They override their own strategy, right? So hypothetically, what would happen if we had technology that executed the trades, the strategies? We actually have 8 that we teach. We've taught 2 so far, one more coming up, or more coming up the next every couple of weeks. And then what if the risk was fixed? Not sometimes you're risking $100, sometimes you're risking $500. It's fixed. It's the same exact, like you're playing the $5 slots at Vegas. $5 every time. We're not jumping around from 5 to 100 to 200 to 500. It's the same risk every single time. And then what if you never miss the trade? Like the technology actually put you into the trade. And then someone like Apex allows you, I believe it's still 20 accounts. How many guys know you can have up to 20 accounts? And their biggest account now is 150K, right? 150K. I don't recommend you start with the bigger accounts because they're a little bit harder to get funded. But how many of you, if you had even a single 150K account, that would be like next level, right? And if you had 20 of them, that's literally, ladies and gentlemen, $3 million that you had available to trade with. Now, again, they're what, 30 bucks each. So it costs you 600 bucks to get 3 million of trading capital. Some of you guys aren't there yet, right? You're not there. You're still trying to figure it out. Not that you have to start there, but that's kind of the possibility. Okay. So let's talk about the future. Rules-based execution. Again, we're describing what we do all day, every day. Okay. Rule-based, right? It's not emotions, not discretion, just rules and checklists of why the system gets into the trade. And then we also have the multi-account scaling. So you can essentially set up an account that you're trading this account, and then you're copying it into, I guess, up to 5, 10, 20. You can copy them automatically. We have our own built-in trade copier that we built about 1.5 years, and you're able to scale into that. Okay. Again, defined risk. And then we have some tools that show you how our technology is doing relative to like the real world. What does the real trades look like now, next week, next month, right? As the trades have happened. And really, this is it, is our education, how we do this builds our edge. You guys all know the casino edge, like in Vegas. I was there last week. It's about a 3% edge. Now imagine making billions of dollars with a tiny edge, but only if you do it right and only if you execute on that over and over and over precisely and exactly. It's not hard, right? But let's say we have a 3% edge and then sometimes we do it right, sometimes we do it wrong, sometimes we get the orders in incorrect, sometimes we show up late, sometimes we jump in, we're emotional. You guys can see how that that positive 3% edge could easily become a negative 5 or 10% edge because of the human element, the human emotions, the mistakes, all the things, right? So again, the education builds our edge and the technology protects our edge. And so again, we're looking for folks to kind of join our program, and this is what we do. We remove the emotional part of the human discipline that sometimes is lacking. Sometimes you're just frustrated in life. You're at maybe a winter stage in life and things appear cold and dark and you're making some poor decisions. Again, this is literally what happens. We do this all day, every day. And some of you guys have asked, hey, how does this work? So we actually have 8 bots, and I'll jump to that here in a sec, but we have 8 different trading bots, and I'll show you real quick. Let's go to, here we go. So we have 8 different trading bots. Okay. What we've talked about last 2 weeks ago was this. We taught this. This one right here is going to be coming up next in our lineup. We have 8 different trading bots. In our business, 8 bots. A bot is a strategy. A strategy is a bot. They're all unique trading bots. Okay. You'll notice that we have the Snapback, which is what we talked about today. We also have a new variation we launched first quarter about this time last year called the Mega Snapback, the Mega Orb and the Orb. And then we have a Mega Scalper, and they all have slightly different strategies. They all work a little bit differently. Now, before you say, oh my gosh, Matt, how do I know which one to use? We save you the time and money. We have 300 pre-configured settings, 300. So what does that mean? We spend hours every month, or my team does, spend hours every month going through 300 predefined settings to figure out what is the ideal settings historically. So we're not just looking back at last week, last month, right? We're going back to 2022, January 2022. Okay. That also means we're basically going for 2023, 2024, and 24 and 2025. We're going back 4 years. Okay. So we're talking about thousands of trades. We're not looking at any one trade, 2 trades, 5, 10, even dozens of trades. We're looking at thousands of trades over the course of 4 years. How well has this worked? Right. And what we're looking for is what has been profitable consistently every month. Now, not every exact month. Sometimes you're going to have some off months, but this is literally what we do all day, every day. And so what is included besides our 8 bots and our pre-configured settings is we have 4 different, or really 3 or 4, depending how you count it. We have a portfolio builder. So instead of running a single bot, you're running a portfolio of bots. Why? As you guys know, different market conditions, different strategies work or don't work, right? And then we also have a portfolio analyzer, a portfolio tracker, which is basically you're able to look at your trades historically and it'll tell you if the portfolio you're using needs to be revisited or if you're good, you're on track, right? And then we have a trade copier where you can copy up to 20 different accounts simultaneously. Okay. So that's basically what we offer. And the reason that we kind of prefer some of this is essentially this right here. Manual trading is emotional. Automation is consistent. You get away from the emotions, and instead of trying to be a perfect trader and manually putting everything in exactly, and you don't even allow yourself to make mistakes, that's what this is, right? Consistency is greater and preferred over perfection. Again, you can scale to multiple accounts. Instant execution, you can use other people's capital. Apex, Topstep, Lucid, there's dozens and dozens of them out there. Blue Ski, Bullinox, lots of them out there. Okay, as long as it works with NinjaTrader or works with our technology. And then literally the technology runs. Like I was actually last month, I was in Lake Tahoe snowboarding with my daughter, and I got a message, another one of my accounts got funded. Like how cool is that, right? Enjoy life. Don't quit your day job yet. Maybe that's the goal, but don't do that yet, right? And so the idea, what we offer here is we have a jump start program, and it's basically $1,950, 150% off. But in this webinar, we have a 55% off coupon. So it basically brings that price from $1,950 down to $899, and then it's $150 a month. So think of this, ladies and gentlemen, as a technology lease. As you guys know, when you lease a car, you don't say, well, I put some money down. Why do I have to make payments? As you guys know, this is a complex system. We spent, I don't even know, an obscene amount of money building technology, and we're not trying to get rich off this. We're trying to give this to the everyday average person, the average retail trader who's really serious about getting accounts funded and growing their account. So we have plenty of people who run this as like a side hustle. We have plenty of people who've got 19 and 20 accounts funded, and they're just working on getting payouts, right? So that's what we offer. Curious if you guys have any questions for us, but that's what I have. Again, if you are interested in this, we'll put the link in the chat pane. If you're interested with the code, again, this is 55% off, right? If you go to our website, you'll see the full price. You will see this full price. We only offer this on these webinars that we only do maybe 2 times a month. Okay. So again, usually these coupon codes are good for about 48 hours. If you need to think about it, that's fine. That's great. We're looking for people who are ready to get started and who are really serious and ready to kind of shed the manual way of doing it. So let us know if you have any questions. But my email, my name is Matt DeLong, and this is my email, matt@pushbuttentrading.co. If you guys have any questions, and if you're interested, we can post some of, we'll share out, send out this video as well. To those of you who want to watch a recap, watch those specific animations that we built for you guys. I'll pause here. Does anyone have any questions? Go ahead and throw it into the chat pane. Let us know if you have any questions. I'll pause for a sec. Otherwise, that's what I have. If we pay the first installment but don't wish to continue, wouldn't we be able to keep the bot? So Tam, so technically this is like a $20,000 software, and we're giving it to you for the upfront and then the monthly, right? And the monthly helps us. We actually build out new technology. We actually, in the last quarter of last year, we built out the entire portfolio tools. So like last year in October, we literally launched these, and we charge our clients zero extra for all the new technology. Again, this is set up like a technology lease. If you think about this is like a $20,000 system. We're trying to have a low monthly payment and a low upfront payment. So, yep. Sean, I can show this week's trades. I'm not actually connected to VPN on this system, and I think we're at time, but I can share whatever you guys want to see. Yep. I'm not connected to the VPS right now to show you that yet. Let's see, any training session. So Franklin, we have twice a week. We have live training on Mondays and Thursdays at it's 8 p.m. Eastern, 7 p.m. So, and then we also offer a $25 onboard coaching rebate. So once you join our program, once you schedule an onboarding call, we actually give you $25 back. Again, we're not trying to get rich off this. We're just trying to kind of cover our costs. We have a massive technology bill every month that we have to pay to build all this technology to kind of turn over to you guys. We're trying to build an edge here and just kind of, we're really looking for people who are serious. Yep. What does maybe subscribed mean? I'm not sure what that means. Any link for onboard coaching? A link for that. So once you sign up, we send that link for the onboarding call, and it's usually 30 minutes. We try to point you in the right direction. Again, I hope you guys can appreciate us giving you a $25 like rebate once you book a call with us after you've joined, so that we can kind of get you started and push you in the right direction. We found that if we can help get you started, you know where to go if you're confused, if you have any questions, what is the live schedule, how do I join, all of those questions, where do I download the software, right? All the troubleshooting, all the stuff that happens, we try to be more proactive, and we literally will give you a $25 credit off your next month bill, right? That's how that works. So, but yeah, we do use NinjaTrader 8. It is free to download. Once you're using like Apex or Topstep, those have the data connections built in that you're able to use to get the real-time feeds for the technology to make its decisions. Yeah. Yep. What other questions do you guys have? Do you have an entire course that you go through as well? Sorry, that is a statement. Do you use filters for the strategy? Justice, actually, we have some basic settings like trailing stops and some other things that the technology does a little bit different. Today, I just wanted to show the basic vanilla strategy and how the mechanics work. We do have a few little twists that we can do on the schedule. Yeah. And Franklin, I'm not sure what you mean by maybe subscribed. I'm not sure what that means. Yeah. Any training session. Yeah. So we pay the full sum, but made a positive. Can we keep up the maintenance fee or have to restart? So if we pay the first installment, but may need to pause for a while, I would say you're probably not ready to start if you have to pause after the first month. Yeah. Yeah. Well, like think about it though. If this is like consistently profitable, why in the world would you want to pause it? I don't understand. Right. So what's the goal, Sean? How many days to get Apex funded and how many days for first payout? So as you guys know, Apex changed your rules and you have 30 days to get funded. Before, there's an unlimited amount of time. It could take you a day or a year or however long. Apex now requires 30 days or less. So the only thing our traders have to do is kind of raise their risk a little bit we actually have a whole entire suite of tools. I haven't even got into the technology itself. I wanted to add some value for you guys. So if you guys appreciate that, show you a new strategy if you haven't seen it before, show you the mechanics of it, give it away at absolutely no charge. And again, we have technology that automates this. Yeah. Do you have stats for the strategy like win rate? So we don't actually think about individual strategies. We think about a portfolio, right? So imagine having one strategy, right? It's like it works in one specific market condition. What we like to do is let's build a portfolio of anywhere from maybe 5 to 20 different bots in a single account. And each one of those bots isn't as super important as the collective. Does that make sense? So the people who are focused on win rates, the win rate, trust me, the win rate by itself is meaningless. Why? Well, imagine I was literally in Las Vegas last week teaching, and imagine you're at a table game in Las Vegas, right? And you have an edge, it's 90% win rate. And when you win $25, but when you lose your house. How many of you guys are now excited about a 90% win rate? No one. Why? Because when you lose a lot more than 10 or 9 or 10 wins, right? You win 90% of the time, but when you win, you only win $25 compared to when you lose a huge amount. No one's excited about the 90% win rate. And effectively, you can still make plenty of money, even with lower win rates, if you manage your risk. And if you're making $2 for every $1 you lose, you can still have a 40 or 45% win rate and still make plenty of money. So want to make sure you don't focus on one stat by itself, because you got to look at the whole. Yep. Franklin, paid coaching sessions. We don't really do that. Like we have you're available to interact and talk to coaches, myself included, when you join our program. We want to help you be successful. We're not trying to nickel and dime you for everything. That's why everything's built into the program itself. Yep. Yep. And so, Sean, again, the goal for Apex 50K would be get it funded in less than 30 days. Obviously, you can kind of be super aggressive and get it funded in one day, but you might blow up an account 1 or 2 times before you get it funded. Now, obviously, once you get into like a PA account, it's a different scenario. If you blow up a PA account, if you're being aggressive, trying to hurry up and make payouts, you have to start back in an evaluation account. You don't start back at the funded account. You start back at square one, literally. So that's why we try to kind of make it a little bit more It's really about consistency over time. Apex changing the rules in the last month just means you got to be a little more aggressive on the front end. That's really the only thing that changes for us. Yep. What other questions you guys have? Great questions. Hopefully you guys learned some things. And if you're interested, we will let us know and we'll send you, we'll send out the recording, I guess, either way. Yep. What other questions you guys have for us? But that's it. That's all I have for you guys. Again, my name is Matt DeLong. Let us know if you have any other questions, and that's what we got for you. Yep. There we go. All right, guys. Thanks for hanging out, and we will see you guys in a couple weeks. Thanks.